It's time for a Friday coffee with your mortgage man, Eric. We are Penn State. Let's get right into it, guys. There is a reason why I'm in my office today. And look, you guys know I don't like doing videos in my office because it's just, overdone, right? I think people like to see a little uniqueness in that behalf. So the reason why, tune in with me here, there's a reason why. It's because today's topic is about rates, interest rates, right? People have been asking me, Eric, can you talk about rates? And I've been trying to find a way that I can do so, but also because, as you guys know, I take these videos, I put them on my website, I put them on my home buyers educational website as well for future reference, that I can send out URLs, links to, that people can become educated, get some sort of education about that specific topic. So here we go. Interest rates, huge misnomer that I think 95% or better of the public has about interest rates is when they hear the news, the great news, right? The media, that they say the feds are raising the rates. And they think immediately mortgage rates are going up. No. Look, we've got to stop that correlation of the two. First off, and let's talk about that. When they say the feds are raising the rates, they're talking about the Fed rate. Okay, the federal interest rate is the rate that banks use to lend money to one another, which is currently at 1.5%, and they're talking about raising that to 2% sometime this year. So what does that mean? There's an indication, right, that means the economy is doing better. And follow me here, which then means if the economy is doing better, interest rates are probably going to go up. And look, I can dive really, really deep into this and spend 30, 45, maybe 60 minutes on this topic. I won't do that today, but this is not an easy topic to just explain so that the masses completely 100% understand. This is something that the majority of lenders, that they can't even explain. If a consumer calls a lender today and says, where are rates going? Tell me why. What's happened? Can you explain why rates are going up? And majority of lenders could not do that. They'd be in a panic, reaching for things online to try to tell their consumer of what they're asking about. Now, look, most consumers don't ask those kind of questions. They just kind of want a really short version of it, and that's it. And the first thing that consumers got to stop doing is asking their coworkers and their neighbors and family members about rates and advice on interest rates and what their rates are, because, right, you're always going to get the one-uppers. Oh, I got a 2% mortgage, and right, and you will seldom, rarely get a truthful response from somebody about their rates and what they have, because we always have the one-uppers. So they've always done something better than you. They got a better rate than you. So we got to be cognizant of that. Anyhow, back to interest rates. Where are rates at? Where are they going? Look, rates have gone up, right, since Christmas time-ish. And we've been told that rates are going up for years now. I mean, if we're honest about this, if we've been hearing and paying any attention to the market, we've been told for years now they're going up. Why are rates going to go up? Because it's only a matter of time before the economy recovers. When the economy recovers and the economy is doing well, interest rates are typically held in the mid-5s, maybe even closer to the 6% range, because everything else is making money, is gaining a yield. You have a yield off of a rate. So your CDs, your online savings accounts, your 401ks, which are usually held in mutual funds, right? They're doing phenomenal right now. So all of these things that have rates attached to it are doing great. The downside of that is the mortgage rate goes up as well. And when people are buying homes, they don't like that. Now look, historically speaking, interest rates are still very low. Now, let's get into some examples of, and this is why I'm sitting in my home office today before I go to the office, because I'd never have 10 minutes of undivided attention to do this video. Everybody calling and knocking on the door, that type of thing. So that's why I'm here. So one of the things that I do as a lender, and I think very, very few percentages of loan officers and lenders have these tools and utilize these tools or understand these things, is I have, through market update and guidance, and I get this through Mortgage Market Guide, that's where I get it, but I watch the bond market, and specifically I watch mortgage-backed securities all day long, every day, other than the weekends, of course, on my computer. One of my screens are always up showing mortgage-backed securities, which is attached to the bond market, not the stock market, okay? So people go, oh, well, the stock market did this, and the stock market did that, and it went up 500, it went down 500. And so they think that there's an immediate correlation to interest rates on that, which is not true, because interest rates are over in the bond market. The mortgage-backed securities, they're traded over in the bond market. Now, sometimes you can make a generalized assumption that if the stock market crashed 600 points, which yesterday it seemed like it was going to happen, that interest rates would get better. It's usually how it works. And if the stock market's going to go up 1,000, ooh, rates are going to take a pretty significant hit. Now, that's not always the case. That's a generalization of assuming you kind of know what's going on with the market. But most loan officers don't. So who are you affiliating yourself as a loan officer, right? Realtors, prospective buyers. It's a thing that you should be cognizant of. Does your lender really understand his craft? Can he explain rates to you? And if you wanted to sit down with him for a half hour, could he dive deep into this? And could we talk about what happened back with the stimulus package when we had the recession, and how the Treasury was buying our own mortgage-backed securities, and then quantitative easing came in to taper that off, and so the prediction of interest rates were eventually going to go up, right? But like I said, that's a half-hour discussion, if not more. So let's go into it. When I pull up my tool today, it says we started the day at -9 basis points. That's not good, right? Anything negative or that's not good. Why? U.S. stocks suffered another blow yesterday after President Trump announced the U.S. will impose tariffs on steel and aluminum imports coming into this country. The news sent stocks sharply lower, with the Dow down 600 points before closing at 422 points lower. Fears of a trade war beginning, right? I could go on. But this is the information that is being given to me as a mortgage lender, so I can explain it to you, a realtor or a prospective buyer, on where rates are going. And then they say, advise your clients. So what are the gurus saying today? Here's what they say. And look, they're not always right. If they were, they'd be billionaires, trillionaires. Start the day floating. That means I wouldn't lock if I were you. Start the day floating, mindful, bonds look wobbly despite the sharp stock sell-off. So getting back to what I was saying, despite that we lost 422 points yesterday in the stock market, bonds still look wobbly. They don't look so good. So now I move into another tool on my Mortgage Market Guide, daily market update. And what are the live bond quotes? Now, this is the page that stays up all day long on my computer. And look, this isn't good. I'm looking at this right now. We started the day off -9, 9 down from where we closed yesterday, and right now we're at -18. So, look, rates are getting worse. We've been shouting it from the rooftops for years. So what does that mean? Lock your rate. Dude, just lock your rate and be done with it. There are way more important things to worry about when purchasing a home, other than trying to save yourself 1/8 in the interest rate. And I can put that over to the long haul. I get that. I'm not saying it's not an important thing, but sometimes we step over a dime to pick up a nickel because there's many other things that you should be worrying about in buying a home. So we're down negative 18 basis points. So I'll give you an example. Somebody yesterday didn't want to lock their rate, and because of whatever, their coworkers, rates are going to get better, they're going to recover. They just lost another 1/8% from yesterday. So wherever I would have locked their rate yesterday, today, probably about an 1/8% worse. So just giving you an example of the tools that I use. I'm going to swing this around so you can see it on my computer screen. There it is. Negative 18 basis points. Okay. It's one of the tools that I use. And that's why I'm in the office today. I just kind of wanted to show you some of those tools. And look, if you're a prospective buyer or if you're a realtor and the lender that you are thinking about using doesn't have these tools, you're probably not with a lender that really knows his craft and knows the back end and the deep into the weeds about rates and mortgage-backed securities. Look, if you want a further discussion, I'd be happy. I love talking about this stuff. I love talking about mortgage-backed securities and the bond market and the trends and the Japanese candles that another term for in the trading market. I love talking about that stuff. If you'd like to, I'd gladly spend a grip load of time with you talking about it. Give me a call, shoot me an email, shoot me a text. I can be reached at 602-757-2171. And it is Friday Coffee with your mortgage man, Eric. Rates, where are they going? They're going up. Lock them while you got them. I doubt we'll ever see in my lifetime. I'm 19 years of age. I doubt in my lifetime we will ever see the 3s and the 4s ever again. If we do, you should be concerned because that means something happened to the economy again, right? So there's the joy. Oh, my interest rates are low again. Yes, but why are they low? Probably had another recession. Something happened, right? I mean, a sick economy, they drive rates down low to bring back the economy. So try to keep that in mind. With that being said, as always, make it a great day, a better tomorrow. Have a great weekend, guys. Realtors, I hope you write 5 contracts this weekend. I'd love it. We'll see you.